Luke Beckman from Central Valley Ag is our grain market analyst this week. USDA reports helped add intrigue to corn and soybean markets. Both exploded higher after the estimates on grain stocks and planted acres were released Tuesday before taming down in the following days. The agency's estimates show a record number of soybean acres with 2% fewer corn acres. If the projections are realized, Nebraska would be the third biggest sower of corn and the seventh largest planter of soybeans. We talked with Luke Thursday afternoon and started by discussing Tuesday's reports.
Well, certainly some fireworks. I think that June 30th did not disappoint in providing some typical volatility. This time one of the biggest bullish divergence when we talk about the stocks numbers for both commodities. So very powerful to see it. It kind of combined with really, a drop in the crop ratings on Monday afternoon, and I really don't think that we traded those crop ratings until after 11 o'clock on Tuesday. So I think there were a lot of things kind of building there. You had the end of the month, you had the end of the quarter, and the funds were certainly short on both markets, corn and soybeans. So you throw all of it together, certainly friendly and a pretty powerful day.
Yeah, tell me how the markets reacted then and how they've reacted since as we talk Thursday afternoon.
Sure. I mean, the markets, the funds have certainly gotten out, and now everyone's kind of trying to put their arms around, how bad is the crop really being affected out east? The acres really didn't give us a whole lot on Tuesday, I don't think. I think it was more of a stock situation and current crop ratings. So I think we're going to look at the weather forecast Sunday night. I think that's going to give us some direction post July 4th, which is typically a turning point in the grain markets. Well, and one thing that we need to keep in mind is we're going to look at the weather forecast and probably look at next Monday's crop ratings as being pretty important. Now remember, any kind of a bull market, I know everybody wants to get friendly here, but we have to continue to feed that bull. So you're going to have to see crop ratings continue to slip to propel corn and soybeans higher. And really, we're going to need some more rain out east to keep that happening. I think sunshine would actually be viewed as negative, excuse me.
Let's talk about those stocks numbers. What do they tell us about usage and demand and how we're chewing up the crops?
Well, with corn first, Jeff, walking into that report, not a lot of analysts were too friendly on third quarter feed demand for corn. The March 31st reports kind of set us up for weaker markets all through the third quarter, and we saw that. So walking into this report, we thought that we would get some confirmation that old crop carryout was growing, and it did not happen. We chewed through a lot of corn in the third quarter, or it's even possible that we overestimated the size of last year's crop. So I think that was a surprise to the market. You saw the numbers come in about 100 million bushels less than what the expectation was.
Anything surprising from Nebraska's perspective, or do you think those acres, the number of acres is about right?
I don't think they deviated too much from what we thought in March. Keep in mind, that survey was taken the first 2 weeks of June, so it is possible that we can see some revisions before it's all said and done. But soybeans certainly more impacted in the acreage. We still have a lot of question marks around soybean acreage, in my opinion.
As you said, these reports are making a lot of people friendly. What do you think here in terms of what people should be doing for sales if they're waiting on old crop or new crop? I'm sure some got made after the report, but what happens now?
Yeah, a lot of cash corn, beans moving, rightfully so. Basis was certainly backing off pretty heavy. For every dime we got in corn, we lost about 3 to 4 in basis. So I think old corn needs to take a look and get some of that stuff sold. Basis is not friendly. A lot of your end users got a lot of coverage in place on this run higher. Definitely need to take a look at new crop. It needs to be something we get done, and ask yourself the question, how much do I have done? If you need to add to sales, get it done on corn. Look at 16 corn as well. That's a value that's trading $4.30 right now that we should probably take a look at. Soybeans look like a sale too on new crop as $9 cash off the combine hit all over the western corn belt. That's something that we need to take a look at if we're behind on new crop soybean sales.
So since those markets both jumped so hard after the report, and today they're up again as we talk, does that give you at all a bullish tilt, or is it just kind of hanging around right now?
No, I think it certainly does. The charts are friendly for corn and soybeans both. But again, walking into a 3-day weekend, I think that we're going to have to continue to feed that bull. The funds got long on soybeans. They're going to have to stay long with corn. They've continued to trim that short. So one thing to keep in mind is the macro environment is not friendly for these guys to continue to dump money into these markets. So we're going to have to see crop ratings, I think, continue to decline to continue to propel both corn and soybeans higher.